Our report highlights a number of root causes to the crisis, but let me focus on one critical one, which is the failure of risk governance, both within individual financial institutions as well as at the regulatory level. Within individual institutions, we saw a number of risk governance failures. For example, CEOs and boards didn't ask the right questions about risk and oftentimes didn't proactively set a risk appetite for the institution. Also, there was frequently a disconnect between the strategic ambition of a firm and its prudential risk management. And finally, compensation models were oftentimes not well aligned with shareholder interests. For example, they weren't sufficiently adjusted for risk, and they didn't match the time horizon of value creation for shareholders. At the regulatory level, there were also failures. A couple examples. In the implementation of Basel II within banks, there was too much focus on Pillar 1, which was a technical evaluation of risk, rather than Pillar 2 or Pillar 3, which should have been emphasized more and focused on broader supervisory issues, as well as disclosure and transparency. A second example would be that regulation had too narrow a perimeter and didn't go wide enough to cover non-bank financial institutions and other participants in the sector, and so therefore missed the opportunity to cover the shadow banking system which evolved. Well, in part yes, and in part no. On the positive side, we see good progress in addressing some specific issues which contributed to the crisis. For example, capital arbitrage within banking, liquidity risk management, accounting standards, as well as the monitoring of rating agencies. However, there are some areas where we think current reform proposals need strengthening. For example, extending regulation to non-bank financial institutions, mitigating capital arbitrage between banking and insurance, and strengthening corporate governance standards for individual financial institutions. Well, as I just highlighted, a number of the current reform proposals are pretty well on target in a number of areas. And in these areas, our recommendation would be for Middle East policymakers to go in the same direction as the international standard setters. However, there are some areas where we don't think there's been sufficient focus by the international bodies, and here perhaps Middle East policymakers could take the lead in developing some further regulation. So, for example, extending the perimeter of regulation beyond banking, strengthening corporate governance standards for individual institutions, or establishing a systemic risk policy-making body which can connect to the prudential supervision part of bank regulation. Well, in our report, we suggest four major focal points. First, upgrading risk management and risk governance processes and align those better with the direction of regulators. Second, to rethink performance management and compensation models to better align those with shareholder interests. Third, improving cost efficiency, not only for short-term cost management, but also to become a best-in-class operator in the future. Finally, strategic differentiation. We think the crisis offers a unique opportunity for the stronger firms to separate themselves from the pack, but it will require a differentiated strategy building on the firm's unique strengths.